let me talk about gift a little bit. If this payment is really qualified as gift, the person receive it, no income. Good, very good. Remember, okay, remember I go back to IRC 61. What is IRC 61? Remember that? Whatever you receive is deemed as your income, but gift is not. Gift is not income. So if this payment really qualify as a gift, that's good, because for those people they receive no income, so no tax. However, the person who gives out, that person may subject to give tax. You understand? So give tax is charged to the person who give away. But luckily, okay, there is a exclusion. Okay. So for example, one person during a year pay to another person, same person, not more than $12,000. Less than $12,000, this number may increase to $13,000, okay? So A pay to B within one whole year, tax year, less than this amount, either $12,000 or $13,000, I need to check the number, no give tax. You don't even report it. So from parent to children, father to give child 1, 12,000, mother to child 1, 12,000. So within 1 year, 24,000 transfer legally, no give tax. Okay, so that's another exemption. However, if the number more than this, you need to report that, but not necessarily pay give tax, because beyond this number, this is called annual exclusion, and there's another whole life exclusion. There's $1 million, and their number match state tax. So if this person is too rich and live too long, and during his or her life, total gift already use out $1 million exemption, this person lose state tax exclusion. Understand? So Uncle Sam always try to collect tax all the time.
So who is the one report the gift tax? If nobody, between the mom and the kids,
okay.
nobody
Let me repeat that, okay? Her question is, well, wait a moment, there is no 1099. Because 1099 is the person who received the money, right? And gift is not income. So, of course, right? Nobody's that stupid enough to say, hey, I received gift from your gift 1099. No, such thing. Because 1099 only issue as income. So her question is very legitimate, right? If there is no report, how IRS know about that? That is true. IRS doesn't know about that. Just like another issue. Say you receive $50,000 from somebody and that person did not report it. Nobody knows in the whole world. However, IRS come in for another matter. And then find out this. So again, okay, who reported? This not report, it's called return, file return. Okay, who never give the gift more than say annual 12,000 to one person, and this person just filed the return, and the deadline is the same day. What day? Deadline is the same day as income tax. April 15th. If it was holiday, then the next business day.
18th this year.
Yeah. So this year is a special. So 15 is a Friday. Eventually, should be Friday, but the Congress just passed a law say, oh, it's okay, you extend to 18.
So, for example, you give every month you give your kids like $1,000, then it's over 12,000, right? You put in the bank. So
let me repeat her questions, okay? You give your kids every month say $1,000 allowance, okay? Then again, that's one purpose of this class. How do you define this $1,000? How do you define it? Okay? If you define it as allowance, it becomes gift. However, if your child still in school, normally yes, still in school, right? Live far away, and you define this $1,000 as the living expenses, it's not even treat it as gift. Don't worry about that. Because you just want to take care of someone. So again, this is one of the purpose of this class. How do you define it? Very important. Well, I remember it was my first class at law school. Where the teachers, number one issue is, well, the purpose you come here to spend your time, your money to learn the taxation is, how do you define this payment? How do you define this transaction? Because each different definition come up with different consequences. Okay, so that's very important. So to answer questions, if you just provide $1,000 as a living expenses, it's not even considered as a gift. So you're safe. Don't worry about that. Okay.
And also same thing for the estate tax. When someone dies, is there anyone will come over to calculate the lump sum, how many assets of the person died?
Yes. Let me repeat her question. So if some person pass away, who is responsible to file estate tax for this person? This person died already, right? Well, someone will. Someone will. Okay, usually it's husband, wife, spouse. If no such person, maybe children. If no such person, maybe relative, close relative. If no such person exists in the whole world, the court gonna assign one lawyer come in to do that.
They can hide some asset, alright?
If this is cash, diamond, jewel, you can hide. But if this is stock, stock means you stock, right? You stock there because you need to change the name from A to B. You stock there. So yes, something you can transfer to hide, but for really valuable, say real estate, for the house, for the land, you stock there. All right, we very quickly. Oh, by the way, IRC is a law. Actually, IRC is a law passed by Congress. Okay, passed by Congress. And you know, IRS is under the Department of Treasury. Okay, that's good enough. What they really mean? What they really mean? Why should I mention this? Because for those department, the head, okay, they change following presidential election. Every 4 years, every 8 years. Okay, if you work as IRS auditor, you don't change. So you just stay there if you want to. But for the head of this department or the this commission, every time they change with the new president. And there's one is called under this IRS can give you the letter. Say for example, you have a certain transaction. You have a certain, especially for business. Okay,